Welcome to Value Vest Daily, where we analyze the best value and momentum investment opportunities. Today, we're tackling a big one. Is MicroStrategy, the single largest corporate holder of Bitcoin on the entire planet, actually running a massive Ponzi scheme right under our noses? It's a huge, controversial question. So let's dive in and see what's really going on.
And this quote right here from a user on Reddit it perfectly captures the whole debate. Intellectually, you look at the legal definition and you say, okay, this isn't a fraud. But then you have this gut feeling, this nagging suspicion that the whole thing is just a giant house of cards, ready to collapse at any moment.
So how on earth did we even get to this point? I mean, to really understand this whole argument, you have to know who MicroStrategy is. Or maybe who they were before they made one of the most radical bets in corporate history.
All right, so MicroStrategy, or MSTR, is in some new startup. They've been around since 1989 making enterprise software. Kind of boring, right? But then, in 2020, their CEO, the very outspoken Michael Saylor, decided to do something completely insane. He took the company's cash reserves and started buying Bitcoin. And then he just kept buying and buying. Today, they hold a mind-boggling 649,000 Bitcoin. The company's stock price, its entire identity, is now almost completely tied to the fate of this one digital asset.
Okay, so let's put on our prosecutor hats for a minute. Let's really look at the case against MicroStrategy. Why are so many people whispering the P word when they talk about this company? Well, it all comes down to how they're funding this massive Bitcoin shopping spree.
Critics have a name for it, the perpetual dilution machine. And here's how it works. Step 1. MSTR raises a ton of money by selling new shares of its own stock or by taking on debt. Step 2, they take all that cash and immediately use it to buy more Bitcoin. Step 3, all that new Bitcoin on the books makes their total asset value balloon. And step 4, that huge number on the balance sheet gets other investors excited, they pile in, the stock price goes up, which allows MSTR to go right back to step 1 and do it all over again. You see the cycle? It really depends on a constant flow of new money coming into the system.
And this is where that uneasy house of cards feeling really kicks in. At times, investors have been willing to pay a massive premium for MSTR stock, sometimes nearly double the actual market value of the Bitcoin that the company holds. Think about that. You're essentially paying $2 to own $1 worth of Bitcoin. And the big question from critics is, why? Why would anyone do that?
So, to sum up the prosecution's case, it's this. First, their actual software business is basically a rounding error now. It's completely irrelevant to the stock price. Second, the whole model just feels totally unsustainable. It needs an endless supply of new buyers willing to pay that premium. Third, the valuation seems to be driven more by Michael Saylor's powerful, charismatic storytelling than by any real business fundamentals. And finally, some critics point to Saylor's track record during the dot-com bust as a pretty big red flag. All right, let's flip the script. Time to hear the case for the defense. Because to properly judge this thing, we need to get super clear on what a Ponzi scheme actually is. It's not just a bad investment that loses money. It is a very specific, legally defined type of criminal fraud.
So here's the textbook definition. A Ponzi scheme pays off its early investors using money taken from newer investors. There are no real profits, no real business. The whole thing depends on 3 key elements: deception, secrecy, and lies. Promises of high, guaranteed returns with no risk, and, critically, a total lack of any real underlying assets. The classic example, of course, is Bernie Madoff, who built a multi-billion-dollar empire on nothing but fabricated statements and lies. So with that definition in mind, let's see how MicroStrategy stacks up. First up, transparency. A Ponzi scheme needs secrecy to survive. Madoff's operation was a black box. MicroStrategy, on the other hand, is a publicly traded company. They live under the constant scrutiny of the SEC. Every single Bitcoin purchase, every dollar of debt they take on, it's all right there in public filings for anyone to see. There is zero deception. It's all happening in plain sight. Second point, underlying assets. A Ponzi is an empty shell. It owns nothing. MicroStrategy's balance sheet is backed by a very real, globally traded asset, Bitcoin. Now, you can debate Bitcoin's value all day long, but you cannot deny that it exists. It's an asset with a market cap well over $1 trillion, and MSTR's holdings are tangible and can be verified on the blockchain. And third, let's talk about promises. Ponzi schemes are all about the promise of safe, steady, can't-miss returns.
MicroStrategy promises the exact opposite. If you read their SEC filings, they're practically screaming from the rooftops about high risk and extreme volatility. They offer no dividends, and they guarantee absolutely nothing. It is not a bait and switch. It is a publicly disclosed, high-stakes gamble. So, if it's not a fraud, what is it? And more to the point, what happens if the central pillar of this whole strategy, the idea that the price of Bitcoin always goes up, suddenly crumbles? This is the ultimate stress test. So let's just ask the question directly. If the price of Bitcoin goes sideways for years or even drops and stays down, does MicroStrategy's model suddenly transform into a Ponzi scheme? And the answer is a clear and simple no. It wouldn't become a fraud. It would become a spectacularly failed bet. There is a world of difference between a bad investment and a criminal enterprise. The structure of the company doesn't change. The outcome just becomes incredibly painful for everyone who invested. And these are the real risks that the company would face. They are sitting on over $8.2 billion in debt. They have to pay roughly $700 million in annual dividends for their preferred stock. Without a rising Bitcoin price to attract new investors, paying those bills becomes a massive problem. They might have to sell more and more stock just to keep the lights on, which would crush existing shareholders. They even admit in their own filings that they might be forced to sell their Bitcoin. And that huge premium on the stock price? Yeah, that would likely evaporate overnight, bringing the whole machine to a grinding halt.
Okay, so we've heard both sides. The prosecution points to this unsustainable cycle that feels kind of sketchy. The defense points to full transparency and a real verifiable asset. So let's bring it all together and land on a verdict. And this table really shows the two sides of the coin perfectly. Why is it not a Ponzi? Because it's fully transparent, regulated, backed by a real asset, and makes no false promises. But why does it feel like one? Because it absolutely relies on new investor money. It trades at that crazy premium. Its success is chained to a single volatile asset, and that perpetual dilution machine really seems to favor the people who got in first. And you know what? Both sides have a point.
So here's the bottom line. MicroStrategy is not a Ponzi scheme, but it's also not a normal company. What it really is a radical, high-stakes, leveraged bet on the future of Bitcoin. And it's an experiment that's being conducted completely out in the open for the entire world to see.
And of course, we have to say it, this is not financial advice. All the information here is for educational purposes only. Please always do your own research before making any investment decisions. Which leaves us with this final, massive question. In 10 years, will we look back at MicroStrategy as a brilliant pioneer that forged a new path for corporations in a digital age? Or will it be remembered as the ultimate cautionary tale of speculative excess? Only time is going to tell. Please subscribe, like, and share ValueVest Daily for daily learning opportunities before you put your money to work. And hey, please put in a comment if you want us to deep dive into any specific high-risk, high-reward opportunities.